welcome back. Now, as we've been saying, markets have been obsessed with the Fed liftoff for the last 18 months, and it's finally here amid a change backdrop, a war that sent commodity prices even higher, also a sell-off in the markets. Now, let's get perspective from Indonesia's Finance Minister, Sri Mulyani Indrawati, and Philippine Finance Secretary, Carlos Dominguez. Thank you both for joining us. Secretary Dominguez, how is the Philippines looking at inflation? Might your 7 to 9% growth target be at risk?
Well, basically, as I said, we came out of a very good last quarter of 2021. We grew at 7.7% year on year. And for the full year, we grew at 5.6%. We were basically taking off already since our infection rates from COVID are well within manageable levels. However, this conflict has hit us in basically 4 channels. The first is through the commodity markets, as Sri Mulyani has said earlier. Prices of commodities, oil, coal, wheat, corn have risen. We have seen also disruptions in the financial markets with interest rates getting a big boost from the crisis. The interest rates were already rising. Third, we are looking at a possible slowdown in foreign investments. Last year, we had the highest foreign investments we've had ever at over $10 billion US. And we think that, this crisis is going to make people, particularly in the West, who are planning to invest elsewhere, think 2 or 3 times. And of course, the fourth channel is the effect on our fiscal space. We are definitely looking at mitigating the effects of inflation. Our inflation rate for the first 2 months of this year was exactly in the middle of our target, which was 3% over year on year. And we think that this inflation rate will this crisis will push our inflation rates quite a bit higher. But we are ready to tackle this. We're going to mitigate the effects on the poorest members of our society by providing subsidies for the poorest 50% of our households, as well as subsidies for public transportation. So we are also looking at the different monetary tools to address this crisis. But again, it's very unfortunate that this crisis is coming right after we are just quite getting over the COVID pandemic. But fortunately, the Philippines has a lot of tools similar to what Her Excellency Sri Mulyani has mentioned, and we will use all of them to ease the effects on our population.
Secretary Dominguez, JP Morgan says that an escalation of the war in the Ukraine and that commodity shock may shave off about 0.4% off your GDP target. Do you agree with that assessment?
Well, we are taking a look at it right now. It all basically depends on how long this crisis is going to last. The longer it takes, obviously, the worse it's going to be for everyone because of the uncertainties in the commodity markets and the financial markets. So we're taking a close look, and we are looking at the possibility that this crisis will end soon, although we realize that there's going to be a bit of a long tail in getting back to normal again.
Consumers on the receiving end, and we know that at some point, companies will have to pass on the cost to consumers. Is there a need, Secretary Dominguez, to perhaps suspend or adjust tariffs on certain types of food, commodity imports? Your thoughts on that? Of course, this is to contain inflation.
Well, basically, we had a long discussion. Excuse me.
Go ahead.
Basically, we had a long discussion on this matter, and we have decided that we will not suspend tariffs on fuel. However, to ease the potential inflation on food, we are going to drop tariffs on food items that we import. Basically, we entered into the pandemic as well as this crisis from a position of strength. Since 2016, we have been very active in reforming our tax system. We have actually broadened our tax base, increased our collections of taxes as a percentage of GDP, and we have spent quite a bit in our Build program. So we came into the pandemic in a strong position. And as the pandemic ended, we also we actually passed three very important bills liberalizing our economy. And this will stand us in good stead as we move ahead through this crisis due to the conflict in Ukraine. One of the biggest items that have supported us is our rice tariffication program, where we have basically taken out the price of rice from the inflation figures. Rice has been very steady, and even prices have even dropped. And it's no longer price of rice is no longer a driver of inflation. So we are looking at this again, as I said, from a position of strength. And although we are very concerned about how long this crisis will last, because as the time goes on, our strength will be eroded. Thank you.
We've been talking about Ukraine and the sanctions on Russia. What do you make of the consequences of U.S. sanctions on Russia's central bank, which effectively cancels its reserves? Would that encourage you to diversify your own reserves, Secretary Dominguez?
Well, we're very concerned about sanctions, because they eventually will affect us. We are not directly affected, but it's like a ricocheting bullet. Sometimes we get hit. On the sanctions on the central bank of Russia, we actually will have no effect on us, since our trade relations with Russia are quite limited, and same with the Ukraine. But this will certainly affect world trade, continue the disruption that was started during the pandemic of logistics and the ease of doing business, particularly in Europe. We are concerned that there might be a effect on the vigorousness of the economies in Western Europe and the United States, who are our big trading partners. So, we are concerned. We are not directly affected by these sanctions, but we are quite concerned on the effects on the overall world economy.
I'd like to touch on your fundraising plans. Secretary Dominguez, any update on plans to sell at least $500 million of ESG bonds? Will you push through with it?
Well, we are evaluating the market at the moment. As you know, the market is very volatile, and we are taking a very, very close look at the issuance of our green bonds, which is in the pipeline. We have not yet made a final decision on that, but we are going to be ready as soon as the market conditions, improve or stabilize.
What are the offshore bond markets will the government consider tapping in the first half, or at least before you step down as finance secretary?
I beg your pardon again?
What other offshore bond markets will you consider tapping before you step down as finance secretary?
Definitely, we're looking at the samurai market, but basically, we rely on our domestic market to the extent of 70 or 72% of our bond financing. The foreign financing is just less than 30% of our total package. And in the meantime, we have been really developing our local capital markets together with the support of the monetary policies in reducing the reserve requirements of our banks here. So again, we look at both markets, but depend more on our domestic peso bond markets.
And just like that, our 25 minutes are up. Philippine Finance Secretary Carlos Dominguez, I thank you so much for your insights today. Thank you for your time.
Thank you for having us.
Thank you.